Good morning, everyone. It's Marcello here. I hope you can hear me well. I can see a few attendees online, and thank you for your participation. So this webinar will be structured over 3 days, and we will be discussing mainly the palm oil market. And we will go into mainly 4 topics. Obviously, the overall CPO Futures Market for the previous day's session, in order to study the behavior of the market, its fundamentals, its technical view versus the market microstructure, and the distribution of prices versus what it's seen as balanced or unbalanced. We'll look as well into the market profile and the order flow view, just to understand whether we are moving, as it seems more recently, from a more neutral bearish stance to a more bullish stance and a higher consolidation. And we'll look as well into the cash market side, its prices and supply and demand updates for Malaysia and Indonesia, because of course supply drives the price range. We'll then end up with a Q&A session on what is perceived as price disequilibrium, if any, versus the current supply and demand expectations. We will look with some interest on the price correlations between DCE CBOT contracts versus the BMD side. The correlation recently was quite relevant, as we've noticed over the past couple of weeks quite an intense activity of cross-market spreads between BMD and CBOT for palm oil versus soybean oil. Each time there was a disequilibrium at each market versus the stronger correlations versus the DCE RBD all-in and the perceived import margins, and that real equilibrium versus what is seen as worth subscribing into the forward months. So starting from the CPO futures market yesterday, so what we have seen is, just spare me a second. So what we have seen yesterday is the CPO sentiment, as mentioned, and trends switching from last week from a more neutral stance to a more bullish stance, as past 8 BMD sessions show the strong reaction from 3 separate retracement attempts at 2700 to 2758 to 2607. And we've noticed that the retracement attempts failed as corrections to actually induce a lower reversal, which could break the 2600 level. This seen as a very strong support, failing to fill the gap from the July 28th lows of 2567. Now, it is quite clear that the downtick on each occasion was aggressively bid from early 2600s to 2800s, showing a higher consolidation in place between 2720, 2750 to the 2780s, which is where the market closed yesterday, as the impact of the demand price elasticity versus the lower shipments is now clearly fading. We've had ITS and AMSPEC data for the full month yesterday showing 260,000 circa lower shipments and 15% lower on a monthly basis. So demand from this view from India and Europe is still weakening. We've seen this much lower yesterday. Europe 24.3% lower and 275,000 tons. India 38% lower and by 316,000 tons. Perspective from the palm upstream, expectations and mainly producers are still for CPO prices to hold in a range between 2400 and 2600 in the second half of 2020 on lower demand, as refiners instead, as seen in particular yesterday in the Indonesian market, are still trading and hedging tops between 27 and 2900 of expectations of very disappointing output levels for September and Q4 2020, with an expectation for local production to reach as low as 18.6 million metric tons to 19.2 million metric tons at best. We have the likes of Multinabati, potentially Wilma, with a disclaimer, I cannot obviously go too much into that, and another key global refinery that are looking at these levels as worth doing the higher hedging versus the output subscriptions in the forward months. The CPO term structure is still holding very stably in a backwardation since Q4 2019, with a 67 ringer inverse on spot nearby, which we have seen more recently flexing to mid-50s, but nevertheless rebounding each time by the close. The spreads at the moment are giving a very significant view on what our expectations in the short term, in particular for spot and nearby, as supply levels, and those are still seen with some concern as still very heavily bid. On the upside, it appears expectations nevertheless for stockpiles in Malaysia should be rising by 10% year on year by 2.2 million metric tons and by December end, while exports easing nearly 17 million metric tons from 18.5 million metric tons in 2019. This is a view that has been voiced in recent weeks by Old World and Mielke in particular, versus global palm oil prices, which I believe may still drop in the next 3 months, widening the CPO bean oil discount, with prices trading more realistically and more fundamentally balanced between 2600 and 2500, with potentially a low to 2400. This is very much in line with the producers range and very much in line with the pricing of CPO structures and options at BMD and the OTC market more recently, and this versus the November OCPO contracts. So looking into the more specific price behavior yesterday, we've seen the CPO November 20 contract closing 46 points higher at 27.84, $669.25 versus a $416 ring rate, following a 45 points higher opening and trading near 7-8 months high. From an intraday high at 28.25 to an intraday low at 27.77, which was reached shortly after the opening, from an opening at 27.83. This was in line with the strong price correlation and progression for CBOT bean oil, which yesterday by the opening was 54 cents by the Leber, higher by 10 a.m. from an opening at 32.69 to 33.23 between 8 a.m. and 10 a.m. Malaysian time, Singaporean time. While instead we noticed over the same period between 9 and 10 a.m. RBD oil extending from 58.02 to 58.60, and 58.60 showing potential for a stronger support around 27.74 if I'm not mistaken, with the BMD pre-opening reacting in line and showing the likelihood for a much higher matching at BMD which till the final minute was locked at 2,800, with bids parked all the way higher from 27.75. This was very, very interesting, looking the specifics of the price distribution at the Dalian, which were quite supportive. The bean oil premium fell from $79 last week at its high to just about $60 by the opening. Still, with reference to correlations, since August the 10th, we've noticed that BMD traded recursively within $38 range at 2760, 2600, while at best the DC all-in corrected by 328 points last week to at most $48. This is of some interest because it shows that each attempt to a reversal is not only just bid in the futures market, but it's actually used towards spot and nearby subscriptions, which are obviously more aggressively bid as CNF South China import margin improves from negative $30 over the past couple of weeks to at some point positive $1.50. So the price correlation basically shows a stronger Chinese spot and nearby demand at $625 to $663 as a price range, as key buyers in August with a 5.5 increase month-on-month to 333,000 tons versus the lower subscriptions mentioned earlier from Europe and India, still lower month-on-month by 24.3 and 37.7%. There was some perspective discussed in the market yesterday as well, and the pricing for the midstream millers output, which in August overall was just nearly 1% higher, but in line mainly with the production seen over the past couple of weeks. This was still a contributor to a stronger, higher rebound. Given UMSPEC and ITS, August demand was quite largely priced at -13 to -15%, and say at at basically a 1.476, 1.491 million metric ton. We still look at a -10 to -13% at most for demand overall. We'll have that data, of course, over the next 8 days as the MPOB announces supply and demand for palm oil locally. So in range, we're looking at 11.6%, more likely flexing to 1.575 million metric tons. Looking at the market profile and order flows, so the CPO November contract yesterday showed patterns of a strengthening market with a combination of a higher price, 60 cents, 56 points higher, higher aggregate participation, 52,227 lots, and with an increase of 3,698, and an open interest which increased by 2,303 lots. The exact data will be discussed later in the last slide. For the open interest, this is what we have seen mainly by the close. The strong opening at DC and CBOT was supported with a breakout for BMD to trade higher from an opening and a standard trend day structure. So a very strong directional trade higher, with obviously buyers in control from the start, with a 45 points higher opening, followed by prices extending to as high as 87 points by 4 p.m. Thereafter, we had some strong covering and minor selling activities taking place from 28.25 to 27.84, which was its close. The accumulation of longs in the market during the morning session was overwhelming, with 6,798 net long in the range of 27.77, 27.19.4. This very likely driven by Chinese consumers, as well as by speculative positions and higher hedging. By 11:30, then subsequently in the afternoon session, with still a relevant 5,578 net long, extending prices in the range of 27.94 to 28.25 from 2:30, the afternoon opening, to 4 o'clock. The shorts from 4 o'clock took over with a combined net short for 4,134 lots, trading the price lower from mainly 28.22, 27.84 in what appears quite likely a controlled price consolidation, which is still seen between. Sorry, guys. If we can please phrase questions at the later stage, we're almost done anyway. From 27.50 to 2800. What was surprising is that the 4,130 lots traded in the closing hour led to just a 14 points price move, with the benchmark closing again at 27.84. So very much
Hello. Hello. Hello, Mr. Marcello. Are you still on the line? Mr. Marcello, I think your side is a bit lagging. We can't hear you right now. I'm not sure others can help me or not. Others can help. No. Hello, Mr. Marcello. Are you still on the line? We can't really hear you. Start from the slide 6, I think. The end of the slide 6. Hello? Can you hear me, Mr. Marcello? You can try to relog in. Maybe some issues on the audio. Oh, I see. Yeah. Mr. Marcello's side got some technical issues. We just wait for him.
Can you hear me now?
Yeah, Mr. Marcello, we can hear you now. Yeah.
Yeah, apologies for that. Sorry.
Yeah, it's okay. It's okay.
Okay, so
I'll slide 6.
Slide 6, right?
The end of slide 6, I think.
So the end, sorry, which end side? The shorts from 1600. I'll start from that side. I hope you may have heard the previous side. Apologies again. So the shorts from 1600 took over with a combined net short of 4,134 lots, trading a price lower from 28.22, where there was a higher concentration of selling, and covering to 27.84, and what appears quite like a controlled price consolidation between 27.50 and 2800. Surprisingly, the 4,130 lots traded in the closing hour led to just a 14 points price move, which is practically nothing for that level of volume exchange, with the benchmark closing at 27.84. And this shows, fundamentally speaking, that the only thing that really made sense yesterday was the aforementioned price correlation to the Dalian in terms of prices to the Chinese demand price subscription ranges. Looking into the cash market side, there was a lot of talk over the past month in particular for the tightness seen, mainly with reference to Lorex and RBD prices on lower available output, which from May the 4th, the lows of May the 4th till August the 4th provided for a higher hedging for the CPO benchmark contract in a 42% progressive bull run, reaching 2808 and yesterday 2825. The key supporting factors are fairly well known. So obviously we have lower labors filled. There is talk of 38,000 lower workforce with delayed peak beyond the June mini peak. And of course, the demand for bean oil and the bean oil complex, which is driving its price correlation in line with CPO, and now holding a palm discount to $65. This is $40 lower versus historical price patterns, but nevertheless, it's still seen as a discount of some relevance. The July supply in Indonesia was the major key concern, with ending stocks reaching multi-year lows and 33% lower month on month. We'll go into the next slide looking at the numbers, but the supply squeeze in Indonesia was very aggressive, and that led to several stages in July to premiums moving into above $30. So nevertheless, looking at the potential for corrections, which we've seen a few recently and as well in July, versus potential price reversions, all-in and steering above $700 have shown some weakness in terms of competitiveness to edible oils and feedstocks in Europe and mainly at Indian ports, as well in terms of biodiesel demand, which has been lagging significantly over the past couple of weeks. Nevertheless, of course, front month spreads are still supportive. We have bean oil all-in spreads now reaching just at worst $7 premium in August versus stronger palm demand seen at a premium of $70 to $100. This is something that is seen as pressing prices each time there is a new high. Nevertheless, we're still on an uptrend. The Indonesian CPO price, spot price at 715, as yesterday shows an in-line correlation with the August higher prices at 689, within a range of 689 to 668.25. Yet the $20 premium versus the local palm seen in July are not really sustainable and limited within a more realistic $8 now. This is showing two things actually. So on a side, we see Indonesian upstream and downstream output increasing versus July lows, with August production now rising 13.6 to 3.9 million metric tons, though demand, of course, is still on a lag in line with Malaysia. at about 11-12%, with ending stocks rising in Indonesia by 19% versus 1.72% locally. So we still expect some supplies concerns to ease and balance with reaction at CPO spreads and the flat prices, as we've seen more recently, actually, as CPO local delivery south is now positioned at and priced at $29.20, $700, and RBD and steering at 732.5, 730. These price levels have historically been on stronger pressure unless we have weather pattern conditions changing against supply expectations in the forward months. So looking at a price range, in particular, starting for the estimate for Malaysian and Indonesian August production. As mentioned, we see end stocks locally rising by at most 2%, given production rising to in line 177 to 184 million metric tons, with still reducing demand to 11.6% to 1.57. While instead in Indonesia, we see a more bearish trend with supply rising, with production at 392 and ending stocks at 1.9 million metric tons, with both exports and domestic consumption on the back foot. As seen yesterday, we have the Malaysian CPO discount now narrowing to $8. We have to monitor this very, very attentively, because this will show potential for Indonesians likely becoming more aggressive in their selling activities, and the layering from current price level for producers may become more attractive as we reach, let's say, a higher consolidation between 27.50 and 28.50 if we reach those level. CNF South China import margins versus local prices in Malaysia, though they are slowly improving, nevertheless, they are very much not attractive at the moment as yet. So looking into what seems likely as a potential opening today, so we have seen the CPO November benchmark closing 46 points higher to 27.84, with aggregate higher participation with an increase by 1,193 lots to 53,423, with overnight positions rising by 3,235 lots, showing clearly still a strong market and strengthening in a higher trend consolidation. The expectation for CPO November contract this morning is for an opening around 27.65, 27.80, with lows in the 40s and mid 50s, and intraday high at most seen at 28.43, 28.13. If we look currently at the Dalian and how that is priced, so we see the Dalian now at 58.30, 20 points lower, with bean oil still marginally higher. So it would be very interesting to see, say, the matching for November, which at present is still around 79 to 27.79, 27.89, with yet a likelihood to try and retest 2800s. And that is it. That is it. Please feel free if you have time, and if you're not busy with the opening, to inquire and ask questions. I hope to be able to answer very swiftly. If not, you have my number. I'm on WhatsApp. Feel free to inquire throughout the day, and I'll try and be as detailed and thorough in what I understand of the market, and hopefully I can learn as well from your perspective, and try relate to that on tomorrow's morning update. James, am I still live?
Yep, I'm still here.
Okay, wonderful.
Yep. So anyone with any questions, you can just type in the questions box. But I just have a look on the questions box. There's no questions. Yeah. Any question regarding to the FCPO? You can ask Mr. Marcello about it.
Or if you wish, we can conclude this call. I take it everyone will have a particular interest in monitoring the CPO matching versus its correlation to Dalian, CBOT. And if you wish to be in touch, obviously I am on WhatsApp all day, and I'll be happy to interact with whatever inquiries you have from your side, if that is suitable, of course.
Yeah, I think Mr. Marcello, I think no questions from the audience. I just have a look on the question board again. There's no questions.
Okay, I hope that was very clear as a session, and I hope as well that that was of some interest. As mentioned earlier, during the initial minute of the webinar, this is a 3-day session, but if you find this of some interest, please feel free to put forward inquiries on whatever you believe are the topics, and I will be happy to go into more detail on whichever the inquiry. And if, of course, you find this relevant as an activity, we might conduct it on a daily basis as well moving forward, more likely probably from next week. So please feel free to give all feedback you think is relevant, and then my colleagues will decide if this adds value to your fundamental view and your trading in the market, of course.
Yeah, so if the audience got any questions, you may try to contact us or contact Mr. Marcello. Okay, since you have our email, right, and our contact numbers. Yeah, you may drop an email to us for asking questions. Okay, I think call it a day, and thank you very much to Mr. Marcello
Absolute
for
pleasure.
great
Absolute
sharing.
pleasure.
Yeah, so we'll see you all tomorrow. Okay. Yeah, thank you.
Absolutely.
Thank you, everyone.
And
you
if it's okay, James, if you could please send the slides to the attendees, so in case they have any questions or they wish to raise some interest on a specific topic, then I can go into a little bit more detail and have that interaction as well. Okay.
Yeah. All right. That's great. Thank you.
Okay. Thank you, everyone. Thank you for your participation.
Thank you, everyone. Thank you.